There's been a lot of uncertainty around UK property over the past few years. High interest rates, new legislation, including the Renters' Rights Act, threat of property taxes, and negative headlines have made many people sit on the sidelines in the last 3 years. But when you step back and look at what is actually happening, there's some very good news for UK property, particularly for investors who understand the fundamentals. Today, I want to explain why the balance is shifting back in favor of UK property and why investors are shifting away from paper investments and savings to buy low cost houses in the north of England. And at the end, I'll explain how they're overcoming the biggest fear of owning rental property by owning it in a 100% passive manner, getting guaranteed net rent without any tenant issues, property repairs, or landlord liabilities. I'm going to do this by explaining 9 UK property facts that underlie the expected upturn and good news for UK rental property in 2026. Hi everyone, I'm Dr. T and I've been in the property business for almost 50 years. Here's a bit about me. In the 1980s, whilst working as a junior doctor, my hobby was computers and I co-founded one of the UK's largest PC manufacturers with over 3,000 staff. Computer making moved to China, and during the past 17 years, I researched and analysed the UK property market and developed a property business for 100% passive investors, which currently looks after almost 3,000 properties and is now run by my children and over 100 staff. I really enjoy helping people with property investment and making videos like this. Please hit the like button, drop a comment below, subscribe, and hit the bell. Let's get back to the video. So here are my 9 UK property facts. UK property fact 1, interest rates are falling. After years of doom and gloom, UK interest rates are finally coming down. Inflation is coming under control and is expected to be well under 3% by end of 2026. With weak economic growth and slight rise in unemployment, the Bank of England has clear room to cut rates further, likely reaching 3.25% by the end of this year. This downward trend in interest rates matters for 2 reasons. First, low rates drive property demand and prices. Mortgages become more affordable. Perceived risk of price drops is lowered, and buying now saves money. A 2-bed house costing £85,000 now is likely to increase to around £90,000 in 12 months and give over £6,000 in net rent during that period. So why wait? Second, falling interest rates slash the income on bank savings to well below inflation. Smart investors are switching to property because leaving money in the bank will make them poorer. UK property fact 2. £15 billion of government grants are a big boost to UK property. The government's recent Warm Homes Plan aims to give grants and incentives to help make UK homes more energy efficient and reduce overall bills in the next 5 years. There'll be big grants to install green energy measures such as solar panels, batteries, and heat pumps. The biggest benefit will be for homes where the occupiers are on lower incomes and hence more benefit for lower cost homes. There is much uncertainty how this will be rolled out, but overall, it means that there'll be around 15 billion of extra investment in UK homes paid for by the government. This adds significant value to UK houses, no matter who owns them, and is a big boost overall to the UK property market. It also makes rental properties more attractive to tenants as they spend less on energy bills, and it means they have more money available for rent. UK property fact 3. Demand for housing keeps rising. The UK population is expected to grow by up to 700,000 people in 2026 and will surpass the 70 million mark. This is mainly via legal migration, and even though the figure in 2026 is likely to be less than in the past, it's still a huge number. This will result in a large number of extra households. And we already know that households are getting smaller, with the average number of people per household falling. All this translates into roughly 300,000 new households needing somewhere to live by the end of 2026. This is real demand driven by population growth and household formation. People still need homes regardless of what happens to the economy and financial markets. So the fact is that UK property remains a desirable asset in high demand. UK property fact 4. Housing supply is not keeping up. In 2025, only around 200,000 new homes were actually built. In 2026, that number is likely to fall further to around 190,000 homes. The targets set by the government for new homes each year are not high enough, and they're not even going to achieve them. No matter what each government says, every year the UK is creating more households than homes. That imbalance puts upward pressure on rents and supports property prices over the medium to long term. So the fact is that housing demand is rising faster than supply. This is one of the strongest fundamentals in the UK property market today. And it's not a short-term issue. It's not going away. UK property fact 5. The Renters' Rights Act is set to increase rental demand. A lot has been said about the Renters' Rights Act. Yes, it will increase costs and liabilities for active landlords. And yes, some landlords may decide to exit, although many will switch to becoming 100% passive investors. But the biggest effect is that it will increase demand for rental properties. For many people, renting is a necessity, but for some, it's a lifestyle and they prefer to rent. The Renters' Rights Act is designed to make renting fairer and more secure for tenants, whilst raising housing standards across the sector. And by improving quality, security, and confidence in renting, it ultimately makes the rental market more attractive and more desirable, thus increasing rental demand. If you haven't subscribed yet, now's a good time. We publish content every week on UK property investing. Hit the bell and like. It really helps the channel and ensures you're notified when the next video is released. UK property fact 6. Cash investors are switching from savings to rental property. Most people with cash sitting in the bank know that property is better, as it's a tangible physical asset that gives long-term security. Even if the financial world collapses, the property is still there. It grows in value over the long term, usually better than inflation, and gives good rental income, much higher than savings. A 3-bed house costing £94,000 today will be around £100,000 in 12 months' time, and also give almost £7,000 in net rent during that period. However, they do nothing because they get some bank interest and they have worries about the risk of property prices going down. But as interest rates fall, their returns on savings fall with them. At the same time, lower rates reduce the risk of property prices falling because property demand rises. They realize that doing nothing is now a risk, and money in the bank is going to make them poorer. This is the reason why so many investors with cash savings are now switching to rental property. UK property fact 7. Investors are switching from the south to low-cost houses in the north. Property prices are rising, but rises are not uniform. Expensive areas in the south and especially London are flat with low rental yields. London prices may fall further and much of the south may show no growth. On the other hand, low-cost houses in the north are rising. These are affordable, in high demand from tenants, offer higher rental yields, and are attractive to both investors and first-time buyers. Price growth in the north is likely to be around 5% to 7%. Over the next 12 months, a 2-bed house costing £85,000 now is likely to increase to around £90,000 and give almost £6,000 in net rent. Low prices in the north also allow investors to buy multiple properties, thus giving more flexibility and lower risk due to diversity. They also have the ability to build a portfolio gradually in a stepwise manner. For all these reasons, many investors are switching their investment from south to north. UK property fact 8. Uncertain times means investors are shifting from paper investments to physical assets. We're in an environment of geopolitical uncertainty and conflicts, splits in the West, for example, over Greenland, possible currency failures, tariffs and trade wars, AI bubble, and a very small but real risk of financial meltdown. In such uncertain times, Paper investments such as shares, bonds, and savings that rely on trust in world institutions are being ditched by many investors in favor of real physical assets such as gold, silver, and property, all of which provide better security in the event of financial meltdown. Rental property that is owned debt-free is becoming the most attractive for securing wealth over the long term. It usually grows better than inflation and is a secure, tangible asset that you possess and is still there if the financial world collapses. And it's better than gold or silver because it's also useful as it provides someone with a home and it gives good regular income. UK Property Fact 9. 100% passive property investment is removing the fear of owning rental property. Of course, many people like the idea of property investment, but don't want the hassle of being a landlord with tenant issues, property repairs, and legal liabilities. This is the biggest fear. That's why the 100% passive model, pioneered by the sponsors of this video, is becoming even more popular. Investors buy rental property and rent it out to a professional company. They fully own the property, receive net rental income, but have no involvement in the management, maintenance, or compliance. The Renters' Rights Act applies to the operating company, who act as the landlord, not the investor, who remains the passive owner. This allows investors to benefit from all the positives of property without the downsides of tenant issues, maintenance, and landlord liabilities. So when you put everything together, the facts are clear and the picture is actually very positive. Interest rates are falling, housing demand is rising, supply is constrained, returns on savings are falling, and property prices are becoming more secure. Property is seen as a safer asset for long-term wealth than financial paper investments. And the 100% passive investment model eliminates the issue of dealing with tenants, property repairs, and landlord liabilities. The scales are indeed shifting back in favor of UK property. For investors who do their research and focus on low-cost housing in the north of England, now is the real opportunity. Please watch the message from our sponsor at the end. They help investors buy low-cost, affordable houses in the north of England and have a system that enables investors to be 100% passive with no costs or landlord liabilities. Thanks for watching.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed and productive from day one. You become the owner and rent it back to Find UK Property so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension type income or gradually build large property portfolios passively in a tax efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.